Update from the new office that we've just transitioned into. Shawn, just wanted to pick your brain on the market at the moment. You've done a bit of a portfolio reshuffle, moving some of your CBA into Challenger. What are you doing over the short term? Anything really changed?
I guess the main thing is the office. At the end of the day, the office is twice the size. We're doubling in expansion, and that's fantastic. The market is tricky here, Nick. I'm looking for the market to pull back 200 points over the next 2 or 3 weeks. That means it's going to be choppy, it's going to be awkward, and that's exactly what we've seen the last few days. The market opens, it sells off 40 or 50 points because the big sellers in the SPY. To me, that's big professional people getting set. And then it bounces back up all day and makes new highs. So 11 o'clock, everyone in the market that I know sells 11 o'clock, buy the market, go to lunch. Sounds like a bit of a joke, but that's kind of what we're seeing at the moment.
Yeah.
I'm looking a bit more professionally than that, or smarter, how you want to put it, and looking at how I want to have my portfolio looking forward. I believe, as you all know by now, that the banking sector, the yield play is solid, it's good, but it's mature, a bit like me, getting a bit old. So let's not get too carried away with it. Let's start taking a bit off the table and look for those industrials, quality stocks that will benefit by things going forward. Hopefully by us getting out of recession or not going into recession. So yeah, I put a bit of CBA into Challenger. I was massively exposed to CBA, and it's been a fantastic trade.
Yeah.
And I've got no problem still holding CBA. I like CBA. But I think Challenger will go to $8 or $9, pays a good dividend in the next week. I want to be a little bit proactive around the edges. But I stress it's around the edges. I think we're going to go sideways for 2 or 3 weeks, then we're going to kick again, and then I'm going to move largely to cash, and that's when I'll scare people.
Okay. And just a couple of stocks I wanted to ask about. I had a client call me this morning, and he asked about MYR. He wasn't in a position to stop himself out of the trade around the $1.80 mark, which we got out a few months ago. Still in the trade. Now the stock's got up to $1.89, looks to have ran into a bit of resistance there. I think MYR report in March, and I've noticed that short position growing to about 20%. Is MYR something you look at the moment, or is it just the dog with fleas? You did hint at recently that did look good technically.
Well, it's not a dog with fleas, it's a bit of this. It's toss a coin. I think at the end of the day, stocks that are performing and reporting okay. We saw that with QBE today. Open down 5%, right up 3%. I'm not quite sure what it is now in the last half an hour. But what we're seeing is, we're seeing some of these stocks that are heavily shorted, MYR 20%, massively shorted. People are betting they're going to go broke. They are betting that MYR has gone. It doesn't really own most of the buildings. They're betting that retail's over.
Yeah.
Now, that's a big bet. 20% of the market cap is huge. So it will have big rallies if things aren't too bad. So what do I think of MYR right here, right now? I'm not buying it. I'm not selling it. It's a really, really bad answer. So for someone holding it, I'll be saying, well, how far are you down? If you're down a bit, X, Y, Z%, maybe sell half.
Yeah.
So unfortunately, it's a bit of a no man's land here for me.
Okay, one last thing, the mining space. You called BHP from 38, 39, all the way down to 30 last year. Had 25 as a target for it. You've traded Forsyth very successfully in the past. Recently we've seen a bounce in the mining space. Maybe because of the dollar, maybe because these companies are very good at cost-cutting initiatives recently. Now we've seen Rio bounce. BHP, the number today was okay. Is there any value there at the moment? Is Shawn Hickman interested in that at the moment, or are you just saying just avoid it, it's going to go back down?
That's easy. I've got absolutely no interest whatsoever in investing in those stocks. Do I think they're good trading vehicles? They are phenomenal trading vehicles. Okay. Phenomenal. They're only down here, or shall I say not as far down as they should be, for 2 reasons. The main reason is the dollar. The cost cutting is good, it's been very solid, been very successful. The Aussie dollar has helped them out of jail so well. Yeah. So stocks like Forsyth, the favourite, the most leveraged one. Forsyth is a very good company, it's very well run. But if iron ore drops another 10, they're in trouble. They can't cut much more. You can't keep cutting costs. You've got to have a point in the line in the sand and say, that's what we produce iron ore at. Yep. If iron ore's below it, you're losing money. Yep. So to me, if you're trading in those companies, you're punting, and I stress that word, you're punting on how strong the Chinese economy will be in the next 5 years. Personally, I've got no idea on that. I don't believe the numbers out of China. I think they're all slightly inflated. China will slow down again. It's still slowing down. So I just think they're trading vehicles. For the traders out there, let's have a bit of fun, we'll trade. For the investors, no need.
Awesome. Thanks a lot for that update, Shawn, and thanks everyone for watching.
Thank you.